Digital Dollar Project. On another titanic question for the industry, whether the U.S. will issue a central bank digital currency, CBDC, the reports offered some ideas and suggested the Federal Reserve continue its ongoing CBDC research, experimentation, and evaluation, but federal officials concluded that no digital dollar should be created unless it's found to be in the national interest. Who decides what's in the national interest? That's not so clear. The Fed will have a definite say, because the central bank would be responsible for managing it. It may further require a decree from the administration, and Congress may also have to get involved. The answer could be steered by a future legal interpretation from the Justice Department, which is expected to outline the authorities the Federal Reserve needs before it can issue a digital dollar. A senior administration official told CoinDesk that, in practical terms, the answer is all of the above. The Fed is independent but will collaborate on an answer with lawmakers, the administration, and other federal agencies to decide the national interest. For their part, Fed officials including Chair Jerome Powell have said they don't intend to press forward without agreement from both the White House and Congress. Meanwhile, the Treasury will lead a dedicated working group to coordinate the ongoing CBDC work, according to one of the reports. Yellen, during the press briefing, said, "Right now, some aspects of our current payment system are too slow or too expensive." The report encourages us to continue working on innovations to promote a system that is more efficient and inclusive. One of the recommendations in that report is to advance CBDC policy and technical work, she said, though Yellen did not address how the government might make a decision to actually issue one. The White House Science Office, in its own report, said it would form a research and development agenda with the National Science Foundation to further study CBDCs. When asked what other practical next steps the reports are suggesting, senior administration officials responded that they're seeking a redoubling of investigations and enforcement efforts against the industry. Friday's White House document pointed at the SEC and Commodity Futures Trading Commission. The White House also emphasized that agencies like the Consumer Financial Protection Bureau and Federal Trade Commission, two federal regulators that have not been as active as the earlier regulators in the crypto sector, should redouble their efforts to monitor consumer complaints and to enforce against unfair, deceptive, or abusive practices. The Treasury will also work on further reports, one to assess risks in decentralized finance, DeFi, due in February, and another looking into non-fungible tokens, due in July. But the next report that could carry significant weight is expected next month, detailing potential finance stability risks from the crypto industry. While the Biden administration continues to study crypto and pursue aggressive enforcement, several efforts are underway in Congress to establish industry regulations. Many of them focus on the Commodity Futures Trading Commission as a central watchdog for crypto activity, though none of them are nearing completion as the current legislative session winds to a close at the end of the year. The bill that had the most momentum this year, a narrower effort to regulate stablecoins, has so far been stuck in committee negotiations. The White House document suggested Biden could recommend a federal licensing or oversight regime for non-bank payment providers. One of the Treasury reports expanded on this, saying the payments regulatory structure would minimize risks but support these types of companies. Non-banks are increasingly providing payment services, including issuing money, or money-like, liabilities and processing payments. On the one hand, participation by non-bank payments companies may contribute to higher levels of competition, inclusion, and innovation. On the other, if these firms are not adequately regulated and supervised, there may be risks to consumers, the financial system, and the broader economy, one Treasury report said. However, the report did not specify what this structure might look like. The crypto industry has long sought a federal regulatory regime that might allow crypto exchanges to apply for only one license that would allow them to operate nationwide, rather than have to apply for a money transmitter license in each state where they wish to operate.
Want to know more about finances? Expand your knowledge. And keep updated to have a strong financial view. We from BrandFi, your branded finance, offer our loyal subscribers a free financial updates portal with first-hand information on crypto, Web3, NFTs, blockchain, finance news updates, and more. Click the link below to proceed. You will get first-class information far earlier than the rest. But there is more you can and should do. Build multiple streams of income. More and more people realize and learn about their finances. They don't know how and where to start. We offer first-class financial information perfect for your needs. Strengthen your financials, get valid and legit information. Click the link below. Become part of our free offers, no financial obligations. But there is one important thing you have to know. You have to become active and involved. So, do it now. Become active and involved. I see you on the other side, Brand Fi.